Hey everyone, so today we are talking about a successful short put trade I took in Meta maybe 25 to 30 days ago, and it has finally come into profit zone. I'm going to show you exactly what I did, all the steps I took initiating the trade, and then for risk management, which was really important. And let's be honest here, the trade was not always profitable, and I'll show you exactly what I mean by that. So it was just about being patient in the option selling world. When you initiate the trade based on probabilities, you move the probabilities in your favor. So over 75% probability of being profitable in this trade was in my favor before I even initiated the trade. And then I had an idea like what to do with the trade if it had gone wrong badly, like, massively, but it never really did that to me. And then I'm going to show you why I stuck to it. And then finally, we come out of the other side with a big profit on this trade. It's about maybe over 90% of the premium that we collected. Let me show you, take you through the screen and then show you exactly what I mean by that. The trade that I'm talking about is this one. Okay. Let me highlight this. This is the Meta trade. This is the trade here. Now look at the P&L percentage. It's like about 98%. It's like almost 100%. This is my paper trading account. So the big positions that I test and trade are in this account. My smaller positions and smaller trades like spreads are in my other live account, which I also trade and make videos on. So you can check my YouTube channel. If you like this and you want to join and want to do things like this with me, I do run a 5-day option trading challenge in which I show you exactly how to trade top trading strategies, which are short put, cover calls, credit spreads, and then zero DTE. I'm getting a lot of questions about zero DTE trades. This cohort is happening on January 19th. It's a 5-day challenge, 1 hour each day, then 30 minutes or 1 hour for like Q&A. I'll put the link in the description. And this is the game plan. We start by figuring out what option selling is, and then we move on straight into the value of this cohort, which is teaching you how to trade these spreads and these options. Anyway, if you're interested, I would like to invite you to like the challenge and then take a look at this page and then see if you want to join. Let's get back to the trade. So how did we start? What did we do with it? How did we end up? Really short video so that you get as much value as I can give you within the next 10 minutes. Let's take a look. So we initiated this trade. I should have done this before, but I need to find the order ID that I finished. So let's find the ticker. The ticker here is Meta. Okay. And then let's go back and find order history, but let's go back probably, I would say 30 days. Let's see if we can find it. 30 days. What did we find? Anything? Okay. So then go back a little bit more than that. So let's start from, there you go. Okay. So I got the trades here. Let's look at trade history, the order that got filled on the day when we traded this. It's a short put in Meta. It used to be Facebook. Some really important things I want to show you guys. How much did we collect? $7.45. In the option world, that is $745. The strike price we chose was 560 put. Okay. And I'll show you why did I choose that. And then the expiration was 19th of December, which is a week from now or 8 days from now. Only one short put. That's how much I trade. This is how much I can stomach, because I also recommend you to like keep position small and diversify the risk across underlying tickers, markets, features, options, stocks, and ETFs, and all that kind of stuff. And all of those we trade in our challenge, in our videos, and in our content. I do all those and setup. So let's take a look at the chart first. I remember the market was down on that day. The trade was filled on 11/4, right? Look at the trade time, 11/4. This time is in Pacific, so 40 minutes before market close, I filled this order, 11/4/2025. Now let's see what the price action was on 11/4. If you hover over here, come back here, 11/4. No, I'm in the wrong one. I'm looking at SPX. Why am I looking at SPX? Okay, so Meta. Okay, so down there, I took a position here when the stock was 11/4. It was down on that day. It did go down to like this support point. Okay, during the life cycle of the trade, it went down to 575, really close to my strike, which was 560. Again, nothing to panic about, because when we initiated this trade, which was 60 days out, I believe at the time, or maybe 55 days, we knew exactly what we were getting into. So we took the trade here when it was down. As a contrarian trader, I would sell puts all day long in a down market, because that's when the volatility was popped up. Look at this chart. Volatility was high on the day because the market was down. Okay, it was hovering around its higher levels, not its average levels. And then you get juicier premiums, when you sell into the strength of the market, which what that means is when the market is down, you sell the puts with juicier premiums. And that's exactly what we did. So sold it here, we collected $7.45. That's how much we collected. Okay, ignore my writing. $7.45. And then it went down on us. It kept going down. It almost touched our strike. It was only off by like $50 or $16. And then from there on, we did nothing because it was still not breaching our short strike. Usually I would adjust this trade, but because the idea here was to own the stock at that strike price. Now, I did not mention that at the start of the video. I should have. The idea, at this level, when it was down here, was to own the stock at this price. And that was the only reason we selected that strike, 560, right? So the idea was to own the strike here, or own the stock at this level. On the day off, this strike was trading at 17 delta. That's my go-to strategy. 17 delta, 45 to 55 days out, 45 to 60 days out. And that's exactly what we did. We stick to that mechanics all day long. We have been doing that for years now, and it works. It works in the spread system. It works in the naked option system. It works in all kind of options trading. 70% of the time it does, not 100% of the time. We are not guaranteeing any results here. We are not saying that we are always 100% profitable. 70% of the time, based on the probability, we make trades in our favor. On that day, again, the probability of profit of this trade was over 75%, and that's the number I like usually. Somewhere around 80% is a good go-to number for me. So 70 does a short strike on the day off, but it was down, so we sold short put. We were long the market. That's a risk reversal trade. We were long the market. You call it, a long market. So you say long, we were bullish on the trade, okay? When the markets are down, we go long. When the markets are up, we go short. That's the whole idea. But we don't short individual stocks. We don't short individual indices. We short commodities, interest rates, other products in the futures option space. And we collect good amount of money, good premium, and good capital efficiency. Anyway, so then it went up, made all the way back to the same level almost, and it gave us some profits. Now, where is it trading right now? This trade is only 8 days out, so it's time to take it off. And it's trading at like, 1 delta. I mean, I would be lucky to get it filled right now because it's trading at 10 cents. I sold it for $745. I'm going to buy it back for 10 cents. That's the amount of profit we made in this one. And I'll show you the chart as well, okay? This is the amount of profit we made. Our strike level is 560. This strike was sitting at, on the day off, it was probably sitting at 70 to 20 at the time. And I'm not saying all of our trades are like this. We don't collect 100% of the profits. We aim for 50 to 60%, maybe 40 to 50. It all depends. Here, the idea was to own the stock at this price when it went down, and then it all worked in our favor because we were patient. We knew exactly what we were doing when we went into the trade, and now it's time to take the profits off the table. Now, let's go and look at the analyze chart. This is how it looks. All the premium has come in. We are max profit here, but again, we don't target max profit. In this case, we were patient. The idea was we want to own the stock at that price. Now, again, because this is a paper trading account, it will not assign me any stock here, so I'm going to take this trade off. But if I was doing this in my real account, this is how I would have traded it. I would have left it in there, and I would have taken the profits here and redeployed capital somewhere else where IV is higher, where implied volatility is higher. That is our edge in this space. Option selling is when implied volatility is higher. Now, when do we get those opportunities? It's when the market is down. So even today, in the morning, the markets were down and I didn't have enough time to do a 0 DTE spread. But usually on down markets, I would sell 0 DTE spreads in the indices because those are cash settled. So you don't need to worry about any physical delivery or anything. So today, that trade is missed out. But again, I have nothing to complain about. So now, how to take the position off? You just go here, right click, create closing order, and then you can go find the original video that I probably made on this trade back then when I was initiating the trade. Exact same thing. I would have explained everything in there, and you see how we initiated the trade. Oh, that's it. It got filled at 11 cents. There you go. We collected about $745 of this trade, almost max profit. Anyway, the other trade I have is in PayPal, which is going slightly against me because it's a short put and the market is down. Now, here's another lesson. Not all the short puts always work. Okay, let's enter PayPal here, and I'll show you the strikes we selected. This was a query from a very small account, and therefore we selected PayPal. I'm not a big fan of PayPal stock because the price is not that good. Liquidity is there, but again, it doesn't really move much for us. So we initiated the trade back then at a strike of, where's the strike? 65. So we traded 65 strike, which was around here, and right now it's trading at 61. So it's down a couple of bucks on us. So it's up 35 bucks, which is fine. Analyze chart, again, we are off. It's gone through our break-even points. Now look at this. This has gone through our break-even, which is totally fine. Sometimes, we do collect big amounts. Sometimes we lose small amounts. That's the whole idea. When we collect big amounts, we go for big wins, and then when it's a smaller, we take it off small losses. So we just buy back and then redeploy capital somewhere else. That's the whole idea. This is my long Apple stock. See if I have any short calls on it. No, I don't. Maybe I should add a short call here, which I can do a separate video on. And that's a position I want to explain thoroughly. So this is what we did. It was a really nice trade in Meta, over 90% profit. You just saw we collected almost all of our premium. And again, I would like to invite you to the challenge. If this is something you like doing, if there's something you want to learn, and there's a money back guarantee. If you don't like anything, there's a $150 charge for this. If you don't like it, just email us. No questions asked. We just send the money back. We have spots filling up fast for the next cohort. We are 30 days out, and I am preparing my pitch and my presentation to explain everything to my audience. Okay, thank you very much for watching, and I'll see you in the next one.